corporate restructuring. Now, ladies and gentlemen, when we talk of corporate restructuring, we are looking at resuscitating, right, a company that is financially troubled, a company which is financially distressed. Currently in the country, you know of many companies here that are financially distressed. Like which companies? For example, we have Kenya Airways, it's on its financial needs. We have, for example, we have Mumia Sugar, it's on its needs. So the biggest thing that we want to ask ourselves in finance, if today you are taken and given this kind of a company to really turn around things for it, what are you going to do? First of all, how do you get to measure and appreciate that this particular company is financially distressed, financially troubled? Now listen, my good students, when we talk about financial distress, it's an area that is quite common, which we are supposed to appreciate here. So we talk about financial distress, you can see indicators of a company that is financially distressed. Like we have the first indicator is a significant decline in stock price, a significant decline in stock price. Look at a company like Everready. Everready stocks shares used to be up there, 20 something. Like a joke, went to 15. Like that, without a lot of notice to the shareholders, we were told that Everready shares could not even trade because now they are valueless. The same case with the Kenya Airways today. You can't go to the stock exchange and buy shares of Kenya Airways because they are basically worthless. So the first indicator, ladies and gentlemen, of any company that is financially distressed, that is financially troubled, is once you start seeing the stock price going down, always question mark. Don't buy shares of that company. That's a company that has got financial trouble. Number two, decline in dividends. A company that has been paying, for example, 7 shillings per share as dividend, and then you come and realize that now it has gone down to 3, 2, like that. Now they have reached a point they're not even paying dividend at all. That's an indication of what here? An indication of financial distress. That's an indication of financial distress. Then we have here a sharp increase in the cost of capital. Normally, what happens when banks start realizing that you are a high-risk client because you're financially troubled, what they'll do, they will recall their cheap facilities. You'll start, in this case here, getting loans from them at a crazy interest rates. You will start realizing that this company, which is financially troubled, is now working with the overdrafts. What do you know about overdrafts? They are very expensive. They are very expensive. Overdrafts are very expensive, right? So you start realizing, you as an accountant, that the weighted average cost of capital of a company is going up. Automatically, that is an indicator of what here? Financial distress. It's an indicator of financial distress. It's an indicator of financial trouble. Now, ladies and gentlemen, we have here inability to obtain further financing. So especially as an auditor, when you go to audit a company and then you ask for the board minutes, and then you realize that we have some concerns from board members that, hey, we applied for an extra loan from KCB and the KCB declined. That is a very serious indication of what you are going concern problem. It's a very serious indication of what you are of financial distress. There is no bank that can ever deny a good company a loan. No bank. I mean, they're in the business of selling what you are, of selling loans, right? The moment you start realizing that a bank is rejecting loan applications from a company, then that company has issues. That's a red flag. All right. So the next one is in Germany here. We are told here, inability to meet past due obligations. Inability to meet past due obligations. Ladies and gentlemen, listen and listen to me very carefully. Once you supply goods to a company, and then you put in an invoice, which you have stated clearly that you should be paid within 30 days, and then 30 days are here, nobody is even communicating with you, no payments from that company in your bank account, start reading danger there. A company that is not able to meet its immediate obligations when they fall deep, that is a company whose going concern is under threat. Is a company whose going concern is under what here? Is under threat. A company whose going concern is under threat. So we have here poor financial reporting system, yes. Poor financial reporting system, yes. Now, ladies and gentlemen, please listen and listen to me very well. When a company is going under, what they'll do is to have what we call creative accounting system. They'll try to create profits here and there, increase their assets here and there, which are not there. Once you realize that a company has started embellishing their financial statements, their financial reporting system is not straight like this, then straight away know that this company's going concern is in doubt, is in doubt, is in doubt. The company's going concern is in doubt. And then now we have here movement into business areas unrelated to the company's basic business, unrelated to the company's basic business. Now, this is what automatically we call the overtrading. Overtrading. So remember, like Uchumi Supermarket, during its heydays, Uchumi Supermarket used to be so big. These guys had even entered into construction industry. I remember they were even producing their own nails, bolts, etc. So they started also getting into manufacturing sector. So of course, without knowing this coupled with corruption at the top level, the company made itself into what we call thin capital, thin capital, thin capitalization, thin capital, thin capital. So when you start realizing that a firm is overtrading, right? Even if it is still within its line of business, like this great supermarket that they used to call what here, which went under, I'm forgetting this Nakumat years, when they used to be during their days, the Nakumat itself, the real Nakumat, they used to tell us that if you need it, we've got it. It used to be a big thing, right? From nowhere, this company, they started opening branches in whichever malls that could come up along Thika Road, wherever. They started opening, in this case, their branches haphazardly. They met themselves in Waterloo. They could not move ahead because now they had entered into a zone we call thin capitalization. Thin capitalization. Thin capitalization. All right. So failure to control costs. Failure to control cost, basically lack of internal control systems in general. Once a firm, in this case here, lacks or rather has got poor internal control systems, then automatically that organization going concern will be under threat. Will be under threat. Ladies and gentlemen, please listen here. Please listen here. We are told here high degree of competition. Yes, like now what is happening in the cement industry. Cement industry competition is driving some of these local small cement producing companies here out of business. Right? Once in this case here, you realize that rivalry is very high. Straight away, the companies moving ahead as a going concern will be in doubt. Intense competition is a killer. Like when we had the SGR coming over, you can see SGR came over. I mean, how many businesses that we know which are in the road transportation were really affected? Look at the famous Buzeki. Buzeki used to be a big person, right? A rich man. But because of SGR, his underbelly was exposed. We saw like people coming and saying that this guy owes, it was not about his liking, not to pay debts. It was because he's being fixed by what here? By this intense competition. Right? So intense competition is also what here? A killer in terms of what here? You can easily become bankrupt if you're in an industry that has got cattle competition. Now, ladies and gentlemen, listen and listen to me very well. My work today is to teach you, ladies and gentlemen, first of all, how do we measure financial distress? 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 Yes. Predicting corporate failure. Predicting corporate failure is what I want to teach you here tonight. So we have got various models of predicting a corporate failure, and the biggest among them is what we call the Altman's Z-score model. The Altman's Z-score model, very popular in your exams. It came last semester but one. How to predict corporate failure. Altman's Z-score model. So we want to write here Altman's Z-score model. And then you guys forgot one thing, that I want to get so many students here. Could you kindly take that invitation message, the Zoom link, and please share it with all your friends out there. Share it with your friends outside there who are supposed to be coming into this serious level, advanced level of CPA. Share it with them. I need to see them here. So we have here Altman's Z-score. Altman's Z-score model. Altman's Z-score model. Altman's Z-score model. Altman's Z-score model. Ladies and gentlemen, this is a model that we shall be using to predict how intense is our financial distress is. How badly are we financially, right? And we shall be able to see that there are firms that automatically get their figures being below some figures here, as you shall see. Those are firms we say that they are already dead. Other firms are at a point that they can be resuscitated. Other firms in this case, they will be in very good positions like Safaricom. I mean, they are not financially distressed at all. So we talk of Altman's Z-score model. It's a model that is used to predict corporate failure. And it makes use of 5 ratios. It uses 5 ratios. It uses 5 ratios to predict corporate failure. To predict corporate failure. It makes use of 5 ratios to predict what here? Corporate failure. It makes use of 5 ratios to predict corporate failure. These 5 ratios, we normally compute or rather remember them using this acronym WAREMAS. Using this acronym WAREMAS. It's a very important acronym that all of us should be remembering. WAREMAS. WAREMAS. So what does this WAREMAS stand for? So we have this WO and MA. Those normally come together 2 like that. 2 like that. So we have here WO. So WO stands for what we call working capital. WO stands for working capital. We have R standing for retained earnings. Retained earnings. We have E standing for EBIT. We have AMA standing for market value of shares. Market value of shares. From there we have this S. S in this case here stands for what here? S stands for sales. S stands for sales. WAREMAS. So 1, 2, 3, 4, 5. WAREMAS. Very important acronym whenever it comes to the Altman's Z-score model. The Altman Z-score model. So anytime we talk about Altman Z-score, always remember that we talk over how many ratios? We talk of 5 ratios. And these 5 ratios, ladies and gentlemen, we normally call them X1, X2, X3, X4, and then we have X5 like that. If we leave them like this, they'll not be ratios. We want to make them ratios, we normally come and divide them. We divide this by We divide this by ta, 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 TL. The only one that takes TL is this one here and the X4, X4TL, where TAR stands for what now here? TAR stands for total assets. TAR stands for total assets, And then we have in this case here TL standing for total liabilities. So TA stands for total assets. And then we have TL standing for total liabilities. So the first thing you get, like they tested as this concept here last semester but one. And so many students were not able to get this, and this is amongst those topics here that are very easy. You must remember the concept of what here, watermass. You must remember the concept of watermass, like that. Great. Ladies and gentlemen, the first thing that you need to do is to compute these ratios. The first thing you need to do is to compute these ratios. So let's try computing these ratios. So I want us to compute these ratios together. And I have a question here with me. The following are the summarized financial statements of Shida. When you call your company Shida, really, what do you expect? This company will get into financial difficulties because these are prophecy that you're making. Shida Products Limited, which is facing financial difficulties. So I can see the income statement turnover, ETC, all the way up to retained earnings of 3,000. And then I can see statement of financial position as at 31st December 2013, all the way additional information, corporation tax is 30%, company shares are currently trading at 30 per share, the cost of capital is 12%, interest rate on the bank loan, and then they have given us the arguments. This was very important to me. The most important thing, like if today I wanted to measure, if today you give me a consultancy job of measuring your level of bankruptcy, I'll ask for your income statement, I'll ask for your what year, I'll come and ask. So the first thing that I'll ask for is your income statement. That is the first thing. And then number two, I'll come and ask for your balance sheet, which is a statement of financial. And then I'll remember the concept of watermass. Now, can a good student tell me here, I want to start with this. How do we normally calculate working capital? All right, let me start with this. Let me get the total assets and total liabilities. So total assets from the balance sheet given. Is there somebody who can give me the total assets, the balance sheet given here? I can see assets, I can see others, I can see current assets. Oh yes, I can see the total assets down here of 1266,000. Because I'm interested in the total assets. Total assets is quite an important metric whenever it comes to bankruptcy issues. So in this case here, the total assets, we have 1266,000. So total assets here, we have 1266,000. How about total liabilities? Remember, when we talk of total liabilities, we are looking at both current and non-current. Total liabilities. So like in this case here from the balance sheet, from the statement of financial position, what is our total liabilities? So in this case here, total liabilities, you can see the current liabilities. I can see for 20,000. And then I've got two long-term liabilities. I have the bank loan of 183, and then I have the debentures of 294,000. So shall I add these three? This for 20,000 is the total for the three current liabilities. So I'll take for 20 plus 183 plus 294. So is there somebody who can give me the figure for the total liabilities? Is there somebody who can give me the figure for the total liabilities? So I'm taking there for 20,000, for 20,000 plus, for 20,000 plus 183,000, plus 183,000 plus 294,000. Plus 294,000. Could you kindly give me this figure? Total liabilities. Total liabilities. Could you kindly give me this figure for total liabilities? 897,000. Thank you very much. This is very important. 897,000. Now from there, we go to this one here. How do I get working capital? I know very well. But to get working capital, we normally take current assets minus current liabilities. Please write this in full. Anytime they want you to get working capital, always take current assets minus current liabilities. Current assets minus current liabilities. So again, go to your balance sheet. Look for current assets. Go to your balance sheet. Look for current assets. So current assets, what do we have here? Current assets, what do we have here? Current assets, ladies and gentlemen, I can see current assets. I can see there are three: inventory, receivables, bank balance. I can see 375,000, these three. So current assets are 375,000. So we have here current asset. So we have here current assets, they are 375,000. How about current liabilities? Again, go to your balance sheet and pick the current liabilities. Pick the current liabilities. So you pick the current liabilities, ladies and gentlemen. Current liabilities, there are three. I can see a figure of 420,000. There are three. I can see a figure of 420,000. So then, gentlemen, then here I am. So we have here 420,000. 420,000. So then, could you kindly subtract here for you to be able to give me the working capital, which I can see vividly is negative. So working capital, which I can see vividly is negative here. 375 minus 420 gives me how much? 375,000 minus 420,000 gives me how much? 45,000 negative, right? 45,000, Monica, thank you very much. 45,000 negative, right? Thank you very much. So negative 45,000. And that's why I told you, please never call your company Shida Limited. You can see now this is a company whose working capital is negative. There are students who are not able to hear me. No, from my side, I can see that like my mic is very nice. Are you guys able to hear Mwalimu? Are you able to hear Mwalimu? Are you guys able to hear Mwalimu? Then Humphrey, I think it is your side. It's your side, Humphrey, which has a problem. It's your side. It must be your network. Thank you so much. Now then, could you kindly come here and give me these figures? So working capital, I want to get X1. Working capital is negative 45,000. Divide this by the total assets. The figure you guys have given me, 1266,000. So divide this by 1266,000. So could you kindly give me a figure here? 4 decimal places. 4 decimal places. Please give me a figure here. 4 decimal places. Negative 45,000. I want to get X1, which is working capital divided by total assets. Working capital divided by total assets. 4 decimal places. So what do we have there? Negative, it must be negative something, right? Must be negative something. Must be negative 0 point something. Must be negative 0 point something. Negative 0.0355. Negative 0.0355. So I'll come and do a summary somewhere. Go to summarize this thing. I'll do a summary somewhere. So in my summary, we have X1 being equal to, in my summary, we have X1 being equal to negative 0.0355. How about X2? I don't know, it's only Nelima who gave me this figure. Are there students also getting this same figure? I always like it when I get so many students giving me a figure. When I get so many students giving me a figure, that's how I feel nice. I know we are doing it correctly. There are students getting this same figure or they're getting a different figure. Thank you so much, John. Muthiani has confirmed. Thank you so much. So could we kindly go to X2? X2, they want us to use retained earnings divided by what year? Total assets. So retained earnings, normally here we confuse students. Here we normally confuse students. Because we shall give you retained earnings for the current year of 3,000, right? And then we shall give you retained earnings in the balance sheet. is the balance sheet. Always we use retained earnings of the balance sheet. We use retained earnings of the balance sheet because we want cumulatively a firm that is liquid should be able to retain their profits. The more you retain your profits, the better you become. So then, gentlemen, here we have retained earnings. Retained earnings is 2222. So balance sheet retained earnings. So this is 2222. Balance sheet retained earnings. So we have here 222,000. Divided this by the same total assets, 466,000. So could you kindly give me this figure? X2 will be equal to who? 2 will be equal to who? Can you give me this figure? X2 will be equal to what figure? X2 will be equal to what figure? X2 will be equal to what figure? John Muthiani is confirming to me, not confirming, but giving me 0.175 is proposed here. So we have somebody to second him. X2, somebody moves speed, a little bit speed. Margaret Mombi, 0.175 for 4 decimal places. I like what this lady has brought on board. Let's be consistent. Let's be consistent with number of decimal places. Let's be consistent. Thank you so much. Now from there we go to X3. X3 is very easy. It's EBIT divided by total assets. Remember, EBIT is earnings before interest and tax. EBIT. Now this is the current year's profit. Profit before interest and what year? Tax. Profit before interest and tax. Profit before interest and tax. Profit before interest and tax. Of course, that will be before the current year. EBIT. It's up here. It's 84,000. So again, it's 84,000 divided by. So for X3, I'll come and take 84,000 here. 84,000 here. We divide this by the total assets figure. 1266,000. Is there somebody who has an answer here for X3? For X3. According to Mr. Edwin, it is 0.0664. So X3 according to Edwin is 0.0664. 0.0664 according to Edwin. Thank you so much, Edwin. From there now we go on with the X4. But you see, it's only Edwin who has given me this figure. Can somebody in this case here help me confirm? Can somebody help me confirm? Confirm what Edwin is giving me here. John has already confirmed 0.00, 0.0664. 0.0664. Thank you very much, Nalima. Now from there we go to X4. This is very interesting. This is very interesting. X4. X4, they want me to use market value of shares divided by total liabilities. It's an equity component. So we are taking market value of shares divided by total liability. Divided by total liability. Divided by total liability. Divided by total liability, divided by total liability. So we have here X4. So when we talk of X4, we are taking market value of shares. Market value of, actually to be very specific, ordinary shares. All over total liabilities, all over total liability. But now the question is, how do we get market value of shares? How will we get market value of shares? How shall we get market value of shares? How shall we get market value of shares? Market value of shares. I know so well what I need to do. That much I know. When I look at this particular equity and liability section, I can see my ordinary share capital has a par value of 25. And I can see the total share capital is 147,000. So first, I'll have to compute those. First, in this case, when I see par value share capital, I'll compute those. So those is share capital over par value. So the nose we're talking about is number of ordinary shares. Number of ordinary shares. This is our nose, number of ordinary shares. These are our nose. So the share capital, what do we have here as our share capital? These guys are great. They have given me the share capital. They have given me the share capital. They have given me the share capital. So they're telling me that the share capital is 147,000. So 147,000 divided by what here? 25. 147,000 divided by 25. So we have here 147,000 divided by 25. Now listen. So when I come here, what I'll do, I'll take here 147,000 divided by 25. Then now, because I've gotten the number of shares, what I want to know is the market value of each share. Market value of each share. Market value of each share. I want to get the market value of all the ordinary shares. What do? I have to get the number of all the ordinary shares times MPS, market value per share. So the market value per share here has been provided. The market value per share here has been provided. Oh yes, we have the market value of shares. They told you note number 2. The company shares are currently trading at 30. They are currently trading at 30. So times 30. Times 30. If I do it this way, then I'll have gotten the market value of all the ordinary shares. And then I'll come and divide this with the total liabilities. So is there somebody who can give me the total liabilities figure here? Is there somebody who can give me the total liabilities figure? Is there somebody who can give me the total liabilities figure? The total liabilities figure. Is there somebody who can give me the total liabilities figure? Total liabilities figure. Total liabilities figure. Total liabilities figure. Total liabilities figure. You can really obtain it. Was it 897,000? If I'm not wrong, I think it was 897,000. If I'm not wrong, 897,000. Thank you very much. So please go slowly in your calculator. Say 147,000 divided by 25 times 30 equals whatever you get there. You divide it by 897,000. You divide it by 897,000. So as I wait for you guys to give me this figure, please remember, we have special offers for you. This price of 4,000 per paper in the advanced level, we have a feeling that that price is very low, given the quality of our training, right? Given the quality of our training, the 4,000 per paper is low. We know there are others who charge even much less, even half of that. But you see, you're trying to look at, what value are you offering the market? Yeah, that is why we introduced this 4,000 price, which has an offer of Monday, at least by ikiwezekana weekend, will you pay something however small for you to lock up the offer? You pay. Don't forget our pay bill, and I wait for you guys to give me the number. Our pay bill. Let me write here. Our pay bill is 402,956.9. Account number is your name. Account number is your name, and then you send the payment message. Send payment message to 0719 525,000. We are charging 4,000 Kenya shillings per paper. Again, remember this advanced level we have there, business and data analytics Excel paper. That one we are charging 8,000. It's double price because it's quite big. It's quite big. But first of all, let's talk of these other normal advanced level papers like that. Great. So they're giving me 01967. They're giving me here 01967. 01967. So X4 is 01967 like that. And then now we go to X5. X5 is an interesting ratio. X5 is an interesting ratio. So X5 is the sales ratio. So I'm taking sales divided by total assets. Sales is the same as turnover. Sales is the same as turnover. Sales is the same as turnover. Sales is the same as turnover, and the turnover is here. The annual sales turnover, 1209,000. 1209,000. So this is 1209,000. You divide this by the total assets, which were 1266,000. So could you kindly give me this X4? Could you kindly give me this X4? Could you kindly give me this X4? Kindly give me this X5. Kindly give me this X5. So X5 is sales divided by total assets. And you guys are great students. I'm able to tell this from the word go. from the word go. So 1209,000 divided by 1266,000. What are we able to get? What are we able to get? What are we able to get? So they are giving us a figure of that's according to Joyce, 0.9550. So x5, my x5, my x5, my x5 is 0.9550. 0.9550. Thank you, Monica, for confirming. Thank you, John, for confirming. Thank you, Delima. Thank you, Rose. Now, after you get these five parameters, now straight away, you'll be able to substitute them in the Z equation. So go ahead and substitute them in the Z equation. So substitute in the Z equation. Substitute them in the Z equation. So the Z equation will always be given to you. The Altman's Z equation will always be given to you. So this is the Altman's Z equation. This will always be given to you. The Z is 1.2. This will always be given to you, not number 5. Z is 1.2 x1 plus we have 1.4. It's supposed to be 1.4 x2. That one is supposed to be 1.4 x2. 1.4 x2 plus 3.3 x3, 3.3 x3 plus 0.6 x4, 0.6 x4 plus 1.0 x5, 1.0 x5. So this is the equation. Don't go bonkers in this case, ladies and gentlemen, trying to cram it, because this will be given to you. This will be given to you. This will be given to you. Unfortunately, now you have the x values. Bring them, plug them in here. So our Z, ladies and gentlemen, here will be 1.2 x1 is minus 0.0355 plus 1.4 x2, which is 0.1754 plus 3.3 x3, x3 which is 0.0664 plus we have here 0.6 x4, x4 which is 0.1967 plus 1.0 x5, x5 which is 0.9550, like that, which will end up giving us what, figures and gentlemen, punch everything. And these one I would expect all of you to really participate. I would expect all of you to really participate. I would expect all of you to really participate in this. Give me the value of Z. 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 You punch all this in your calculator, everything at once. 1.2 times minus. As long as you're keen, now if you leave the negative out, you end up getting a 0. So Z will be 1.2 times minus 0.0345 plus 1.4 times plus 3.3 times, blah, 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 blah. And then you'll be able to give me the Z value. You'll be able to give me the Z value. You'll be able to give me the Z value. You'll be able to give me the Z value. You shall be able to give me the Z value. The Z value. So our next class will be on Sunday, and I believe that all these guys here would have paid before our Sunday class. Advanced level papers are quite intense. Don't waste time. You just join classes straight away. Join the classes straight away. Join the class, you'll never go wrong. Don't wait for results. No, results, actually, we began marking today. So your results will be coming around the middle of next month. You can't wait for that long. Risk. So is there somebody who is able to give me this Z figure? Is there somebody who is able to give me this Z figure? The time, I've not understood, Jonathan, your question. You can pay anytime. No, it's a payment, even right now. You can pay even when we are continuing here. So Gladys gives me a figure of 1.4951. Is there any other student who is able to get this figure? Can someone else in this case here confirm this figure? Jonathan, I think Mr. Martha misunderstood your question. Maybe you could ask again. 1.4951. 1.4951. Joyce has confirmed. Linda Mugoi has confirmed. Thank you so much. Now we go to the last step. Let's go to the last step now. So the last step. So the last step is the Z money, the Altman's number line. So the Altman's number line. The last one is the Altman's number line. The Altman's number line. So the Altman's number line, here we are. We begin with 0. We have 1.8. We have 2.7. 0, 1.8, 2.7. This is normally given. Altman gave these 3 figures to us. The 3 figures to us. 0, 1.8, and 2.7 like that. So it told us that when you compute the Z over any company, and then Z falls here, automatically what this would mean is that the company is bankrupt. The company is bankrupt. When you get the company Z score falling here, the company is bankrupt. So then we have between here and here, we talk of 50% success. So basically 50% bankrupt, 50% success. So there is a likelihood it could go high or it comes down here, 50-50. And then 2.7 and above here is 100% success. 100% success like that. 100% success. 100% success. Great. 100% success. Now, ladies and gentlemen, here we are. The company that we have just computed its Z score is 1.49, about 1.5, right? Where does it fall here? Does it fall in A? Does it fall in A, section B, or section C? Where does it fall? Where does it fall? Where does it fall? Yeah, Shida Limited, 1.4951 is less than 1.8. This is less than 1.8. Company from Shida Kweli, it means that Shida Limited is a bankrupt company. Shida Limited is a bankrupt company. So Shida Limited is a bankrupt company, And of course, bankrupt companies, we don't recommend restructuring. Bankrupt companies recommend liquidation. Let's liquidate. Through a court process, it will be liquidated. And then we follow that procedure of would we pay? Would we do this and this? etc. It should be liquidated. So I want to give you homework here. I've taught you a very important model, which is highly applicable in our workplaces. I would want tomorrow, if possible, we're going to work tomorrow, I would want you to pick the income statement of your company and the balance sheet of your company. This last year's balance sheet, last year's income statement, and then you compute the Z score of your company. And then be able to advise your director, tell your directors that, you know what, I computed the Z score and I found the Z score in this case here being in C, the Z score being in A. Is there somebody who can try even guessing which section do you think is your company's Z score falling, even without computing? For those of us who are working, which section do you think is your company's Z score operating in? Gladys Komboka says C. Gladys Komboka says, hey, our farm is highly liquid. C. How about the other students? Don't fear. But again, remember when you compute your company's Z score and then you realize it is at A, please get a good language of going to talk to your bosses. Please get a good language. Otherwise, you'll be fired, because remember, farms which are in A are farms without internal control systems. These are farms where directors, you'll compute and come back, right? Thank you very much. Now, ladies and gentlemen, these are those companies where no internal control systems, directors are able to withdraw money the way they wish, and then they want the company to prosper. They don't plow in back any, retain their profits, nothing really. Nothing is working there. That's why they are in section A. Now, there is one disadvantage, that this model cannot be used for service sector. You'll be asked, what is the limitation? It cannot be used to compute levels of bankruptcy for service sector companies. companies that are offering services. So Gladys, very good. You can see like now Ali Orembo is asking even before. He's even asking before I gave this. You see, like a school does not sell products. That's what I'm manufacturing part. A school like ourselves, ladies and gentlemen, in this case, we are doing what we are selling services. The model is only limited to product selling companies. So Ali Orembo, maybe you ask your friends here to give you their company's financial statements. You don't have any privilege really here. You don't have any privilege here, ladies and gentlemen, for Ali. So that is it. And I want to believe, ladies and gentlemen, that I should be able to stop there. If you can get last semester, I think last semester but one paper, I would want you to do the question of Altmans. But I believe it's quite early to start giving you homeworks. For now, what I want you guys to do for me is to look for good numbers for this morning. Talk to your colleagues at your workplace. Let's join RCM Online College. Like Stephen has told us, it's April 2022. April 2022, it has a very good question of Altman's Z-score. Altman's Z-score. Never came last semester, so this semester I'm timing. I know the areas semester. So please get out of your way and ensure that you are able to market us very well. For now, it is ciao from me. It's bye-bye. I hope you have gotten something out of this session.